Ladies and gentlemen, good day and welcome to Rainbow Children's Medicare Limited's Q4 FY26 earnings conference call hosted by IIFL Capital Services Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jeevani from IIFL Capital Services. Thank you and over to you, Mr. Jeevani.
Hi, good morning everyone. This is Rahul from IIFL Capital. I welcome you all to the fourth quarter earnings conference call of Rainbow Hospitals being hosted by IIFL. From Rainbow, we have with us today Dr. Ramesh Kancharla, Chairman and Managing Director, Mr. Abrar Ali Dalal, Group CEO, Mr. Vikas Maheshwari, Group CFO, and Mr. Saurabh Bhandari, Head of Investor Relations. Over to you, sir, for your opening comments.
Thank you, Rahul. Good morning, everyone, and thank you for joining us for Rainbow Children's Hospital, Children's Medicare Limited earnings call for Q4 and the financial year ending March 31st, 2026. As I reflect on the year gone by, I would like to start with a few key strategic and operational updates for the quarter as well as the year. FY26 has been the landmark year for Rainbow, with the company adding nearly 500 beds, the highest annual capacity addition in its history, significantly strengthening our platform for long-term growth across key markets. The investments made over the last 2 years are now beginning to reflect on our performance, with Rainbow delivering its highest ever quarterly revenue and achieving 20% year-on-year growth. Our key operating metrics include outpatient footfalls, inpatient discharges, and deliveries continue to witness healthy growth across both mature as well as the new hospitals. Importantly, the occupancies remain stable despite substantial bed addition. The acquired hospitals at Warangal and Guwahati have integrated seamlessly into the Rainbow network and continue to scale up well operationally. In addition, the newly commissioned hospitals, Rajahmundry, HRBR layout in Bangalore, Electronic City in Bangalore, Mahadevapura IVF Center in Bangalore, are witnessing good patient traction. We are pleased with the response in Bangalore, where we managed to onboard highly reputed consultants across pediatrics, obstetrics, neonatal, and fertility specialties. Today, Rainbow is the largest pediatric and perinatal care provider in Bangalore City. As we enter the next phase of growth, our focus firmly is centered on improving occupancies, clinical excellence, and patient experience. Mr. Abrar Ali Dalal has transitioned seamlessly into the role of CEO, Chief Executive Officer position, and is actively driving day-to-day and strategic operations across the organization. I'm also extremely proud to share that Rainbow has once again been recognized as a great place to work, making 6th recognition in the last 7 years with the outstanding employee satisfaction score of 90%. Coming to financials, for Q4 FY26, the company reported a revenue of 459.9 crores, a growth of 24%, EBITDA of 144.7 crores with a growth of 26%, and a PAT of 78.2 crores, a growth of 38% compared to the Q4 of the last financial year. Occupancy for the quarter stood at 45.3%. Coming to projects, we have further strengthened our projects team with onboarding of Director of the Projects, for timely execution of our projects. The regional hub hospital in Coimbatore of 130 beds is in an active construction phase now, and we expect to commence operations in H2 FY28. We continue to make significant good progress in our Gurugram projects, where we are trying to fast-track the Sector 56 of 125 beds to commence operations in H2 FY28, and a large super specialty hub in Sector 44 of 325 beds is expected to commence operations in Q1 FY29. We have received all statutory approvals for regional Greenfield Hub Hospital in Pune of 150 beds. The excavation work is in progress now. So we have also signed a lease agreement for a Greenfield Spoke Hospital of 80 beds in Bangalore City at a micro market is called Seagali, which is very close to ITPL and Hoskote. This is a rapidly growing micro market. This will be our 7th hospital in the city. We have entered into an agreement for build-to-suit 100-bed hospital in central Indore, and it's in the permission stage. We have also entered into MOU to run pediatrics and obstetrics services in 200-bed multi-specialty hospital, which is owned by the same owner. This multi-specialty belongs to the same owner, and he would be building for us a 100-bed hospital in the neighboring site. So therefore, it would allow us to kind of transfer our practice seamlessly in 2 years' time into the new premises. So with the current expansions, what we have are nearly 900 plus beds in the execution phase, which are all likely to kind of complete in about 2.5 years' time. As I conclude, I want to reiterate the strategic priorities as we enter into the next phase of growth. So my role will be working very closely with the CEO and the senior management personnel to drive growth, service excellence, and consultant engagement. Strengthening Rainbow clinical offerings significantly in all our hub hospitals as well as the regional spoke hospitals to focus on clinical outcomes. With the success of 2 acquisitions, which have been done last 2 years' time, we are very excited about looking at the acquisitions which are aligned to our philosophy and also where we can add the scale. And also we are looking at some new spoke hospitals in existing cities, and we are forming up our plans for the new geographies as well. With that, I now hand over the mic to Mr. Abrar Ali Dalal before Mr. Vikas Dual's financial update. Thank you.
So, thank you, Dr. Ramesh. Good morning, everyone, and thank you for joining us today. It has been a little over 4 months since I joined Rainbow, and I'm extremely pleased with the depth of clinical excellence, quality culture, and strong organizational foundation that the company has built over the years. Rainbow today has a highly differentiated and scalable platform in women and children healthcare, supported by a strong brand, full-time consultant-led model, and an outstanding clinical team across the network. Over the last few months, I've spent good time engaging closely with our unit leadership teams, clinicians, and functional heads across the organization. One of the key opportunities ahead of us is to further improve occupancies, consultant engagement, service mix, patient experience, and operating leverage across the network, particularly as the recent capacity additions mature over the coming years. I am now deeply involved in our operating review cadence and transformation initiatives and are building a more data-driven and execution-focused organization. This includes strengthening dashboarding and performance tracking systems, institutionalizing structured review mechanisms, and improving accountability across units for sharper execution at hospital level. In parallel, we are making meaningful investments in sales and marketing, doctor engagement, and patient conversion initiatives to accelerate growth momentum and improve asset utilization across the network. I'm looking forward to working closely with the leadership team to drive aspirational yet achievable growth of 20% in the current year while maintaining margins. Further, I remain highly optimistic about Rainbow's long-term growth opportunity and our ability to create a sustainable value for all stakeholders. Thank you so much, and I'd like to hand over the call to Vikas. Thanks.
Thank you, Mr. Abrar. A very good morning to all of you, and thank you for attending this investors conference. I am pleased to brief on the financial performance and the key developments of Rainbow Hospital for the fourth quarter and the financial year ended 31st March 2026. Our operating revenue for the quarter stood at 460 crores, reflecting a growth of 24% compared to the corresponding quarter of the previous financial year. For the full year FY26, our revenue stood at 1,703 crores, reflecting a growth of 12% compared to FY25. Our EBITDA for the quarter amounted to rupees 145 crores, marking a growth of 26% compared to the same period last year. For the FY26, our EBITDA stood at 544 crores, reflecting a growth of 11% compared to the previous financial year. Our EBITDA margin for the current quarter stood at 31.5%, while for FY26, our EBITDA margin stood at 32%. Profit after tax for the quarter stood at rupees 78.2 crores, reflecting a growth of 38%. Ex of deferred tax adjustment, the PAT growth is at around 17% over the corresponding quarter of the previous financial year. For the FY26, our PAT stood at 282 crores, registering a growth of 15.3% compared to FY25. In terms of operational performance, inpatient discharges, outpatient volumes, and the deliveries witnessed a very healthy growth of 18%, 19%, and 22% respectively during the quarter, reflecting a strong demand momentum across both mature and newly commissioned hospitals. Our payer mix continued to remain very robust and balanced, with insurance and cash contributions remaining broadly stable during the quarter and for the full year. We had 47.5% cash business for the quarter, while the insurance business was at around 52%. I am pleased to inform that the company continued to maintain a strong balance sheet and healthy liquidity position of rupees 594 crore rupees, which provides adequate flexibility to support our ongoing capital expenditure plans, growth initiatives, and the potential inorganic opportunities. With our current cash position and anticipated internal accruals, we remain well positioned to fund all planned expansions through the internal resources. Our operating cash flow to pre-Ind AS EBITDA is at around 2.8%, reflecting a strong cash conversions post-tax payment. During the quarter, we invested 61 crore rupees on the ongoing capex plans, and for the full year, we have invested close to 217 crore rupees capex towards expanding and strengthening capabilities across existing and upcoming hospitals, in line with our long-term growth strategy. With these insights, I conclude my financial update. I now invite questions and suggestions from the participants. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask questions may please press star and one on the touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sukrit D. Patil from Eyesight Fintrade Private Limited. Please go ahead.
Good morning to the team. I have two questions. My first question to Mr. Dalal is, looking ahead, how do you see Rainbow's operational module evolving to balance scale with efficiency what measures are being taken to strengthen hospital network resilience, automation, and patient delivery standards across the diverse geographies? That's my first question. I'll ask my second question after this. Thank you.
Yeah, so I think to answer your first question, operationally, we're getting a lot of tech into place. We are getting a new CRM software which we're working on. I think at this point, Rainbow has a lot of leads which come in because of the various activities we do it. And we are strengthening our operational capabilities to convert these leads. So one is tech, and that is going to be largely play a large role in strengthening the operational capabilities.
My second question to Mr. Vikas is, from a technical standpoint, how is the company optimizing its capital structure to balance growth investments in new hospitals and technologies with keeping the debts under control, especially given the capital-intensive nature of the business? Can you elaborate in detail on the framework being used for cash flow forecasting, interest rate risk management, and working capital efficiency to ensure liquidity while still maintaining the profits above the green zone? Thank you.
That's a great question. Actually, if you look at our balance sheet, we have been a cash-rich company, so we don't have any debt in our book right now. Our balance sheet has close to 700 crore rupees cash right now while we speak. And whatever the capex we have done so far has been funded through internal accrual. Whatever the pipelines we have of close to 900 beds, which we have just announced in our presentation, all will be funded through our internal accruals, and we are not forcing any borrowings from that.
Thank you, and best wishes.
Thank you.
Thank you.
Thank you. Participants who wishes to ask questions may please press star and 1. We'll take the next question from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. 2 questions. First, can you elaborate on your M&A strategy? Now you mentioned you are looking to expand meaningfully with assets which are aligned to your philosophy. So, which will be the market where you are mainly looking to acquire assets, and what kind of hospital in terms of size or the ticket size which you are intent to look for?
Yeah, Damayanti, right now what we have said is about 900 beds. They're all kind of in various stages of building, coming into operations. So it is now moving forward with a great experience of 2 acquisitions. Both have turned extremely well. And what we are again looking at some of the acquisitions, definitely we would look at the size of the operations and also the scope of what we can build on top of it. Now, I would optimistically look at nothing less than about at least to have a 50 beds to scale up to 100 beds. The smaller ones is going to be difficult for us, and this is how we look at it. Wherever there is a scalability and the alignment, and also where the micro market is good, we would definitely be looking at it. And also, of course, in the larger players or multi kind of unit players, we will definitely welcome about it. We will look at it proactively and see how we can actually kind of look at them as a acquisition. That's one strategy. Another one is kind of a new geography. Which are the geographies which are probably are going to be a kind of a cities which are evolving cities which have got a growth potential. I think we have work in progress. Probably about 3 months' time, we will come out with our growth plan.
So, if I understand correctly, you intend to look assets pan-India. As you mentioned, wherever opportunities are good, there is attractive micro market, you will look to add assets there.
Absolutely.
Okay, that's good to hear. And then, sir, the Indore arrangement. So you mentioned 200 beds, which is existing hospital. It is an operational and management contract for you. Is that right?
No, it's a 200 bed is a multi-specialty hospital which is being built by a doctor entrepreneur. So, and he is building for us in the next, the neighborhood site, 100 bed of a specialty children's hospital with women's services. So meanwhile, since it's a new hospital of 200 beds, he invited us to kind of to do a pediatric and obstetrics business in that hospital exclusively. We felt it's kind of a good opportunity so that our entry becomes much faster and we can build our business from this August itself and transfer it to the new premises in 2 years' time whenever the new unit is ready. That is a very clear arrangement which we have made.
And under this arrangement, you will be booking the revenue. What are the financial arrangements very broadly, if you can highlight?
Yeah, Devanti, thanks for this question. So the arrangement will be that we will be given a space in the existing operational hospital where we will have the admission being done at our name. We will discharge the patient. We will deploy our doctors and the nurses to that area to handle the pediatrics and the mother care and the prenatal care and ICU. We will deploy our team. So it will be a subset till time the new facility at the adjacent gets operational.
So the revenue will accrue to us.
So revenue will be in our name.
Yes, it is not an O&M contract.
Okay. And this 200 bed is the total capacity. Out of that, how many will be for the pediatric care part, which you will manage?
I think we have about designated beds about for the newborn pediatric intensive care. When it comes to kind of the rooms and all, it's very open. And it could be about 50 or 60 or 70. It doesn't really matter, really. As much as we can do it. That's how we position it. Yeah. There are about 25 beds in the intensive care services.
25 beds in the intensive care. Okay.
Yeah.
Okay. Thank you, sir. I'll get back to you.
Pediatrics and neonatal intensive care.
Yeah.
Thank you. Sorry, sir, you were saying something?
No, I was just checking, Devanti, whether the clarity is there or any follow-up questions there on that.
So thank you for answering those questions. She has left the queue, sir.
Sure.
Thank you. A reminder to all the participants that you may please press star and one to ask questions. We'll take the next question from the line of Alankar Garude from Kotak Institutional Equities. Please go ahead.
Hi, good morning, everyone. So out of this 18% growth in IP discharges in the fourth quarter, how much was organic?
Yeah, Alankar, so it around, 9% has come from our acquired units, and the balance of acquired and plus the new units, and the rest is organic.
And if I strip off the acquired units only, how much would the growth be? The mature plus the existing units?
Acquired unit is contributing between 7 to 8% depending upon the month which we are calculating. So at around 8% of the revenue is coming from the acquired unit, which is Guwahati and the Warangal.
This is revenue, Alankar. This is not volumes.
Okay, and will the mix in volumes be any significantly different?
Almost it should be in the same line, Alankar.
Okay. So then the question is, we've seen a improvement in the organic growth after a few quarters. So just wanted to understand the sustainability of it. How much of this improvement can be attributed to the digital initiatives as well as the marketing initiatives you had talked about in the previous call? And if you can elaborate on where are we now in this journey of enhancing, you mentioned about technology in the opening remarks, but on digital marketing, where are we in this journey right now?
Yeah, Alankar, I think, as I said, we will be doing a lot of tech initiatives. The tech initiatives will be targeted towards operations, as I said in the earlier remark, and towards a lot of promotional sales and marketing activities. I think we're looking at two new things. One I said is a CRM software, and second is a new hospital information software. I think what we need to do is, as we digitally and promotionally increase our bandwidth in terms of investments, talk more about our doctors, create more visibility about our doctors. I think as and when the patient funnel starts inquiring about Rainbow, we will use the tech to convert. I think we have started this journey somewhere, a couple of months back, and of course, a long way to go. But we have seen some improvement. Some of the improvement that you've seen, the volume could be attributed to this, but I will not really bet all my money on that. But going forward in the next 2 or 3 months, I think you'll see a big difference, and which maybe we'll talk about in the end of the first quarter.
Got it, sir. The second question is, if you look at ALOS for us, it's somewhere around 2.7, 2.75 days. Is there any scope to reduce ALOS further?
I think, Alankar, we are industry best, right? It is at 2.7, and consistently for the last 3 years, if you look at more or less, we are in the same range, plus minus 0.1, right? So I think this is where we stand right now.
Okay, so difficult to go significantly beyond this number.
Okay. I'll give my perspective, Alankar, about the ALOS. In a children's hospital and women's hospital, this is absolutely, the recovery is always the fastest with women or children because of the young people, and it's really not in your hands. And whether you want to increase the ALOS, it's not in your hands. If you want to decrease the ALOS, it's not in your hands. So it's very natural. It's very natural. I think the case mix change will probably influence to an extent. As we move forward, if there are a lot of chronic cases which are going to stay, the long-term ICU stays and those things, and if the obstetrics is going up, definitely ALOS will come down further. I think that is where the balance is. It's very natural in building a business. We will know over a period of time, the next couple of years, and how things are going to be. I think we are very comfortable with the ALOS about 2.7, 2.8.
Got it, sir. That's helpful. The other question was, can you qualitatively talk about your performance across the key clusters, specifically Hyderabad, Bangalore, Chennai, and even if you can talk about Madhukar, how's been the performance, say, in FY26 fourth quarter, and what are your expectations over the coming year? Thank you.
I think of whatever it is, we've been earlier talking about the seasonal backdrops and those things. And actually, if you look at the year, it's a kind of very straight line of performance, perhaps peaking towards the Q4. That's all because of the quality mix, improving the quality mix of the patients. And also that we have substantially increased the complexities and case mix. And also, there is a certain increase in the fertility business. Obstetrics have come from, earlier it used to be about 28 to 30%. Now it's shifted to 32%. So there is a dynamics are changing. And I don't think we are going to be, that's another important thing is, we'll move probably kind of a shift away from the little bit of seasonal dependency to a kind of a more of to drive the business 360 degrees. Of course, seasons will play out for every organization, but I think it's become a less seasonal dependent and also try to improve. That's why one of the points I said is that improving our clinical mix and also strengthening our clinical model at all the hub hospitals as well as the regional spokes, kind of onboarding the specialty doctors, trying to do more complexities.
Sir, if you can help, break your response across the three main clusters, Hyderabad, Bangalore, Chennai, and even Madhukar. Any qualitative comments on the performance? Where are we in the journey of taking Bangalore closer to Hyderabad levels or even Chennai closer to Bangalore? Any color on that would be really helpful.
Yeah, definitely. When it comes to kind of ICU services got a lot more strengthened in both Bangalore and Chennai. That's number one. And also specialty services have actually strengthened further, especially in Bangalore, of our Maratali hub. Number of doctors and also the overall service mix has improved. And the number of the BMTs and liver transplants are going up in Chennai. So these are all things which kind of we are try to get Bangalore and Chennai move closer to it. Of course, it will take time. So, for example, Chennai is kind of we first year itself we have done about 10 liver transplants. So with that, we can actually have a kind of a government tie-up and do more transplants in Chennai. So, and that will improve the intensity of service as well. So similarly in Bangalore that we have got a complete stack of all the specialty doctors. So driving kind of a next advanced care is more important in Bangalore. So mind you, the pediatric specialty hospital takes its own time. And I think how we nurtured Hyderabad is, I'm very happy that things are panning out very well in Bangalore as well as in Chennai.
Got it, sir. And one final question with your permission. We have seen some consolidation of the top two players, at least on the maternity side, last week in the mother and child segment. From a competition standpoint, can it change anything at all for Rainbow?
I think we are, well, let's put it answering this today. We are a largest children's healthcare player, both in terms of size as well as what we can deal with, and there's no one in the country which have come to anywhere closer to us in terms of deliverables and specialties, advancements, what we do. So that's absolutely we are undisputed leader. Number two is the mother care, which is the obstetrics, perinatal, what we call as the perinatal services, which is more scientific, and the delivery segment. So we do about 20,000 deliveries, and we don't really overstate it all the times, because at the same time, probably we are the second or third largest the maternity chain. And also now, with the last 2 years, we have started fertility. It is fairly fast growing. And I do not want to compare ourselves or match ourselves with any of the boutique chains, which are more of a mom and pop stores, because their sizes are less than 50 beds, 25 to 30, 40 beds. And we don't do any hospital which is less. The lowest is 50 beds. Even that lowest 50 beds are only 10% of the hospitals. We are more and more pushing towards the larger hospital spaces and also stronger offerings, wider offerings, and also stronger clinical strength within the organization. So that is how we want to position ourselves to be. This is been driven by the medical entrepreneurs. So we always look for the clinical excellence and also building the healthcare for the country in the space of children and women.
Understood, sir. Thank you and all the best.
Thanks, Alankar.
Thank you. The next question is from the line of Rahul Jeevani from IIFL Capital. Please go ahead.
Yes, sir. Just a few clarifications again on the Indore hospital. So, sir, this incremental, let's say, 100-bed new pediatric unit, which is being built, I'm assuming that the capex for that unit will be done by the partner. So what would be Rainbow's investment if we have to do anything there? And if you can also talk about what kind of revenue sharing arrangement we have with the partner.
Okay. First of all, the project which is going to build is basically you will do the base building with a semi-warm shell and give it to us on the lease. It is like any other hospitals which we lease it in the long term, 20 to 30 years lease. It is the same model. All the capex which is going to be for the interiors and the medical capex will be done. There is the revenue share is.
There is no.
There's
a lease rental payment only.
I think there's a lease rental payment to be done with a bonus.
Okay, so as of now, the arrangement is for the 200-bed existing multi-speciality hospital. You are just managing the pediatric unit for them, and once you move to this new 100 unit, this would function as a normal leased hospital for you.
Exactly. We're trying to construct things in Indore.
Sure, sir. And then what kind of, because obviously this is not part of the expansion plan which you have put out in the PPT. So what kind of a spend do you envisage for this 100-bed Indore hospital?
I think it will be about, it's early days, but probably like any other regional spoke hospital, about 70 lakhs, 65 to 70 lakhs per bed will incur.
Okay, sure, sir. And commissioning, you said, over the next 2-year period.
Yeah, I think likely 2 years.
Sure, sir. And sir, my second question is with respect to performance across the mature and new hospitals. Now, while on the new hospital side, we saw a very significant increase in capacity to the tune of 80%. Despite that, we were able to hold on to occupancies in new hospitals. But if we look at the mature hospitals for the full year, we have seen a decline in occupancy, while on the ALOS as well, on the mature hospitals, there has been some decline. But can you qualify in terms of what led to the decline in occupancies for the mature hospitals, apart from, let's say, a weaker seasonal business, which we might have seen last year?
Oh, okay. So I think we have discussed in the last 2 quarters in earnings calls as well. I think one of the main reasons in seasonal hospitals, when there is a seasonal hit comes, the mature hospitals are the ones which actually the occupancy drops because of the seasonal top-up was not there. That was primarily reason of the Q2 and Q3 were the ones. Well, under Q4, we are actually turned positive, and I think we are kind of clocked up about
52% occupancy there.
Occupancy in the Q4.
Yes.
Q4. So I think some of the things which we have already addressed it, as I said earlier, I think it's not that seasonal dependency is something which we are looking at it. We have to come out of the seasonal dependency and also build a wider spectrum and a larger stack of things, and also definitely the obstetrics share has also increased, and also fertility share is increased, and also the specialty mix is going to increase. So seasons will make a difference. There's no doubt about it. I think as we move forward in future, I think we would actually see significantly that independence from the season.
Sure, sir. So just on the seasonal business, in the past, the seasonal business has contributed around 10 to 12% of our overall top line. So let's say, what would have been the contribution in FY26 for the seasonal business? And if you can also call out the contribution from the IVF segment and the international business for last year.
Okay. So if you see that we have grown 12% last year growth overall. I mean, had seasonal business been there, it would have been about 18 to 20% of growth overall. So that was not there. So that's how we say that. As Abrar was earlier saying about it, with the current quarter performance, we would expect it to kind of clock 20% growth for the current upcoming financial year, and that is taking all this in consideration of whatever the growth initiatives we are doing it. One important thing is that, as you said, international business really has taken a hit last year as well because of geopolitical situations. Dominantly, we used to get patients from Bangladesh and some of the
Somalia,
because a lot of deporting has happened, Somalians and Nigerians and those people.
Correct.
So therefore, the local coordinators were not really available. So there is a significant dip in the
international
business to the expected level.
Yeah, and in fact, in Q4 you have seen the war also escalate. So that has also affected the flights from Middle East. So that has also impacted the international business in the Q4. Rahul.
Sure, sir. Can you call out the number just for bookkeeping purposes, both international patient and the IVF revenue contribution?
So, Rahul, the revenue from the international patient remained almost flat in the last year. It was at around 30 crore rupees. To be precise, 28.9 crore rupees for the financial year FY26. And as far as the IVF is concerned, is almost for the full year. It is 3.7% of the total revenue, but it is increasing quarter on quarter. For the quarter 4, it was 4.1. So for the full year, it is 3.7.
Yeah. And in absolute number terms, IVF business for full year was 60 crores.
61.4.
Sure, sir. I will join back the queue. Thank you. Thanks for answering my questions.
Thank you.
Thank you. The next question is from the line of Mahesh, an individual investor. Please go ahead.
Hi, good morning, everyone. I am retail investor and also a customer of Rainbow. And I have seen the different experience between Hyderabad and Vizag branches. So as we are entering into new cities, so how are we ensuring the same quality standards maintained at new branches or new spoke hospitals?
Yeah. Mahesh, I think it's what you said is very right. That's something which we are really working on actually as a big initiative of One Rainbow culture, and where there's a lot of clinical inputs. We have a kind of a team of people working on it and trying to ensure that protocolization and also the SOPs for the medical, how we kind of operate across the group, because Children's Hospital is a very medical hospital, so we need to have standardization, SOPs and protocolization, something which the Hyderabad, Vijayawada, Bangalore works very, very similar. But definitely we need to expand it to across the board, because now we have 25 hospitals. This has been a significant initiative from my side to my senior doctor team, which we have been actively working on that.
Yeah, because I have observed this pattern, like most of the jobs are in urban cities, and when they come to hometowns and they prefer Rainbow because there's same quality they prefer, but they are experiencing little bit quality gaps. So that's why.
Thanks for bringing that. We'll definitely kind of ensure that this is going to be addressed very seriously.
Thank you. The next question is from the line of Anubhav Singhal from Anand Rathi. Please go ahead.
Good morning, sir. Could you provide the revenue numbers for pharmacy for full year FY26 and Q4?
Sorry, Anubhav, there was disturbance. Can you please repeat your question?
Sir, could you provide the pharmacy revenue numbers for Q4 as well as FY26?
Pharmacy numbers.
So, say, Anubhav, as a process, right, we don't disclose this amount, but in the reverse way, if you want to calculate, if you look at our pharmacy sales, is at around 12 and 13% is the cost, right? On that, there will be some margins. Based on that, you can calculate what is the revenue share on that. We don't disclose it separately, Abhinav.
Sure, sir. Thank you.
Thank you. Anyone who wishes to ask questions may please press star and one now. The next question is from the line of Vedant Nilekar from ICICI Securities. Please go ahead.
Yeah. Am I audible?
Yes.
Yes, you are.
Thank you for the opportunity and congratulations to the management for a great set of numbers. My first question is on the dedicated IVF center we have at Mahadevpuram, Bangalore. Now that we have our full year revenues from IVF at around 3.7%, how are we envisaging the ramp up and what would be the drivers for it in the next 2 to 3 years?
I think most of our fertility facilities are within the main hospital so far. So we've got a couple of standalones in Bangalore and one in Hyderabad. So how we look at our fertility business is to see that mainly on the quality of the doctors and also the framework of ethics, and also how the internal doctors support our fertility business and B2C. So far, we've been very happy with the way the fertility is actually the growth of the fertility, and in the last 2 years' time, and I would expect that our growth would definitely be a kind of 25% year on year for at least next 3 years' time.
Okay, thank you for that. And my second question is on the capex. Can you please help us with the figure of capex for the next 2 years, along with with the bifurcation of maintenance and growth?
Yeah, Vidhan. So our CapEx, as you have told correctly, is we can bifurcate into two. The maintenance CapEx is close to 45 crore rupees per year on overall units of 25 units which we have. As far as the CapEx is concerned, again, you can bifurcate into two parts. The major part of the CapEx is our Gurgaon facility, where we are building it ourselves, right? We have acquired the land and we have already spent some of the amount on that. We expect that another 400 crore rupees to go on building up the whole hospital at the Gurgaon. As far as the balance, Coimbatore, Pune, and other facility, you can take it around 70 lakh rupees per bed for the CapEx.
70 lakh rupees per bed?
Yeah, at around 65 to 70 lakh rupees per bed, you can take that.
Okay. And so is there any CapEx included regarding Indore in this? Yeah,
Indore you can add 100 beds. So right now we have a pipeline of 900 beds inclusive of our Gurgaon project, right? Excluding that, there will be a 450 beds. On that, you can take 70 lakh rupees per bed. So roughly 350 crore rupees will go towards Coimbatore, Pune, and Indore, others, Sigali facility, etc. The balance, around 400 crore rupees will go towards 400 to 500 crore rupees will go for our Gurgaon projects in the next 2 years' time.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Vishal Manchanda from Systematics. Please go ahead.
Yeah. Hi, good morning, everyone, and thanks for the opportunity. I have a question on the occupancy. Like in your opening remarks, you highlighted that improving occupancy and service mix is one of the areas that you are working on. So can you highlight some near-term and medium-term levers for the occupancy improvement and service mix improvement?
I think the occupancy is what we look at it as that could drive our budgets and those things. The desirable occupancies is about anywhere about 56 to 58% of the group level. I think we will deliver every single number, and that's what is expected of our model. So where we have a kind of the peaks of occupancy some months and also off peaks of because of the holidays and various healthy seasons. So if we do a blended occupancy about 56 to 58, and we will deliver every single number. That's how we look at it. In terms of service mix changes, yes, of course, our parts will be different and the spoke hospitals will be different. Spoke hospitals will definitely be a kind of more you looking at a volume driven business growth, and hub hospitals both as well as volumes as well as a kind of service mix. In terms of specialty mix, in terms of more numbers doing it, surgical number or in more intensive care admissions, more specialty patients to be treated. These are, for example, some of the super specialties like liver transplants. So we predicted significant ramp up on liver transplants for the current year. So all these things are going to kind of play out for the achieving our top lines.
So are there segments within healthcare, like within the pediatric care, that you currently do not have presence in and are intending to build presence in those categories?
So we have a complete stack of all the specialties in Hyderabad, and we have got almost 60-70% in Bangalore, which we are kind of trying to build more and more in Bangalore as well as in Chennai. So children's super specialties are something which takes its own time because of these are the new age new specialties which kind of new to the country, which we are building it over a period of time. And we built it very well in Hyderabad, which we are doing it fast pace in Bangalore and Chennai. That's how our intent is to kind of to build we are like a mirror image of multi-specialty hospital of adult, where it is focused on children's multi-specialty. That's what we have been doing, and we've been pretty successful in that.
Sir, would you be able to share some number as to what in your kind of core hubs like Hyderabad, what would be our market share in the super specialty services? Like, would we have a very dominant share, like most of the cases coming to Rainbow?
Definitely, most of comments, it's difficult to establish the market share because we don't know how, where, and everything happens. But obviously that, among the pediatric players, nobody else does anything significant.
So Vishal, recently we engaged with CRISIL for the industry report on the pediatrics and others on the market which we stand. So that work is in progress. So once that report is finalized, we will share that more authentically with data with you. Because right now the data is very, very fragmented, right? It is not available. So we have taken the help of CRISIL. They are building it up, that stack for us.
Great. Thank you very much. This will be very helpful. Thank you.
Thanks.
Thank you. The next question is from the line of Rahul Jeevani from IIFL Capital. Please go ahead.
Yes, sir. Sir, just on this geographic expansion which you are targeting now with, let's say, the Delhi hospitals, we would have a presence in North. Pune provides us an entry into Maharashtra, and now we have announced this Indore hospital as well into Central India. So let's say M&A opportunities which you are looking at would largely be focused in these three clusters, or you are looking at outside as well. I forgot about Guwahati as well. You have Guwahati Northeast. So if you can talk about this geographic expansion which you are targeting in some of these newer markets.
Rather than looking at what the specificity of the market, I think it's more important is that what kind of opportunities available and in what markets and how would we look at it, those markets. I think that is how we look at it. I think we have been looking around to see what exactly opportunities we have and which would work out for us. I think I don't think we are specific about geographies, and we are fine to do across the country anywhere.
Sure, sir. So why I was asking, because let's say in our core clusters of Hyderabad, Bangalore and Chennai, we have adopted this hub and spoke model where we have a larger hub hospital and the spokes feed into the hub. So in these, obviously Delhi has the hub and one spoke, but for some of these other markets, wouldn't you want to have a similar kind of hub and spoke approach to expansion?
No, we eventually, once we have an opportunity, for example, Guwahati, we have acquired a hospital and I think it's seamlessly integrated. We are building up more and more specialties over there, and also we added we positively look at what else to be done in the Northeast market. So we just kind of working on it. How do we kind of address the other areas? So, I mean, that is a primary, our vision is to see that wherever we go, offer the pediatric care through the hub and spoke model, based on the city and the size of the city and also accessibility of your hospital. Not necessarily we go on hub and spoke every area. For example, place like Indore, you don't need a spokes again. If you go into other cities, smaller cities like the Raipur, you may not need you need one hospital is good enough. Place like Pune, definitely you would look at hub and spoke model. So based on the city and population and accessibility, traffic conditions, various other factors influences us to kind of take decision on hub and spoke.
Sure, sir. So maybe within some of these smaller cities where you might expand, we might have just one or two hospitals without necessarily having a hub.
Yeah, sure.
Sure, sir. That's it from my side. Thank you.
Thank you.
Thank you. We'll take the next question from the line of Uttam Purohit from VVD Asset Management. Please go ahead.
Good morning and congratulations on the good set of numbers. My question was on the ARPOB. If you could give some color on the drivers of ARPOB this quarter and for the whole year as well. How much of was it price driven and how much of it was it mix driven?
I think the ARPOB is about 8% growth, right? 8% ARPOB growth now. ARPOB is, in our case, is dominantly a kind of case mix. And also, some tweaking is increasing ARPOB because of the fertility also. Definitely adds to the ARPOB, right?
Correct.
So these are the two reasons, mainly to ARPOB to grow, and also pricing also plays in ARPOB year on year.
And how do we see this number 2-3 years down the line?
I think we have to look at both ARPOB and as well as ARPP together and see that when you look at the growth, I would say in ARPP, because it's difficult to say month on month, quarter to quarter ARPOB. ARPOB yearly we can look at it, and the ARPPs are the ones I think it gives us better visibility, which we always say about 5-6% of growth of ARPP. Annually.
Yeah, thank you. And on the growth side, if I see this quarter, a good chunk of growth came from the maturing hospitals. So if you could give some sense like which geographies were the key drivers and where are we seeing a quick ramp up other than Hyderabad?
I think we've seen the growth across the group, which is Hyderabad, Bangalore, Chennai, and Andhra Pradesh as well. Those are the dominant markets for us.
And on the matured side, from a long time, we have seen the occupancy has been range bound near the 54, 55, 56 kind of number. Historically, it was around 60%, 61%. So, do you think we could get back to those figures? Because I think it's been long since we have got such figures in matured side.
Yeah, I'm sure. I think that's what we expect it to be at 60% mature hospitals for the coming year. I think that's what is. If we need to drive our budgets and the numbers, we'll have to do a 60% of mature units and blended about 56-57%.
Okay, thanks. That's from my side.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Yeah, thank you, investors, for joining the conference call and giving your views and asking the thoughtful questions. Thank you very much for this.
If you have any questions, you can reach out to Investor Relations at Rainbow Hospitals, or you can email us directly.
Thank you very much. Thank you.
Thank you.
Thank you, sir. Thank you, members of the management. On behalf of IIFL Capital Services, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.